Could the state of the world's second largest economy be in a lot more danger than we think? Joining us to talk about China today is Gordon Chang, author of The Coming Collapse of China, and known for his grim outlook a bit on the country. Gordon, welcome back to the show.
Thank you so much.
So the Chinese economy is so fragile, you say, that it might not be able to get through another year. Let's talk about that. That statement really did shock me here, Gordon.
Yeah, I think that 2017 is going to be more like the turbulent 2015 than the more normal 2016. In 2015, we had two big events. We had the mid-June stock collapse, and we had the mid-August shock devaluation of the currency. Now, Chinese leaders have been able to stabilize things this year, but they did it at great cost. So, for instance, a big increase in debt, as well as these draconian capital controls. Because in 2015, you had $1 trillion come out of the economy, according to Bloomberg. This year, things are okay, but there's a big cost. So, for instance, with these capital controls, no one's going to put money into China anymore if they don't think they can get it back out. And so I think 2017 is going to be a problem. Also, you got Trump, the Trump factor. Trump, if he reduces regulation, cut taxes, he could create a boom in the U.S. that would encourage even more money to come out of China. We saw a hint of this on Wednesday with the Federal Reserve's announcement of a quarter-point increase. That rocked the Chinese bond markets on Thursday. And that just shows that China really no longer is in control of its economy. You got Trump and Janet Yellen have much more effect on what's going to go on in China than Chinese technocrats who are at the mercy of the United States right now.
So, Gordon, you wrote your book back in 2001 calling for the collapse of China. Now, 15 years later, it's still standing. So what do you feel will be different now? What will be that catalyst that you think will bring down the economy? I know you listed many things, but what's really fundamentally changed since when you wrote your book?
Well, in 2001, I said it would take 10 years, so I'm 5 years out of time. And I think what happened essentially was you had the 2008 downturn, which changed a lot of things. But the real problem in China, and what has changed, essentially is that they can't reform the economy as we've seen. They've increased debt to levels which are scary. We don't really know what the debt to GDP ratio is, but Soros said it was 350%. And there are people in Hong Kong who don't have an axe to grind who say it's even higher than that, 400%. We don't really know what it is. And we also know that Chinese leaders have the ability to defer crises. But we also have seen that as they defer them, these underlying imbalances in the Chinese economy are getting bigger and bigger, which means that when the adjustment, which is inevitable, but when this adjustment comes, it will be severe. So I actually don't think that they'll be able to get by this, especially because they're no longer in command of things, as we see the Chinese people do everything they possibly can to get out of their own currency. That's a real sign of lack of confidence of the participants in the Chinese economy.
Now, Gordon, because of this China demise, you expect gold to be taking off. Is that correct?
Yes. We've seen just minor bad news that comes out of China, just rocks global markets. That occurred in September of last year. I actually think what's going to happen is that, people understand that there are problems in China, but I don't think that they look at it with the same lens that I do. And if I'm right about this, they're going to be taken by surprise. And when you have this surprise, there's going to be a rush to a number of asset classes. People are going to go to the dollar as a safe haven, and they will go into gold because that has traditionally been where investors go when they're really nervous. And I think China could actually do that. And there's another factor here, and that is, I think the Chinese government they're trying to control their own currency to keep as much money in as possible. People in China want out of the renminbi, which means I think that they're going to start, if they can't get their money out because of these capital controls, I think that they'll look for other things such as gold, which is really the perfect hedge for them, because if they don't want to be in the renminbi, they'll want to be in metals. And the best metal for them, of course, would be the shiny yellow one.
But if the Chinese economy is hurting, would people have the income to purchase gold? They're one of the largest buyers of the metal. So, couldn't it go the other way and actually hurt the metal?
Well, that's a great question. And yes, I think incomes are going to tend to go down in China. But you gotta also remember there's a lot of built-in wealth that people have accumulated. So the people in China are actually quite wealthy. And although they may be hurting going forward, they will want to protect assets. And so I do see that there will be a rush into gold. There's been a little bit of this up to now, but people have been able to export cash. But as the Chinese government really puts the brakes on a lot of this, so for instance, there are controls which are off the books, which are informal. And as they increase those informal off the books controls, I think people are going to say, look, I can't get my money out. The next best thing to do is to put gold under the mattress.
Do you have any forecasts for gold, Gordan, in 2017?
Yeah, I'm not really good at forecasting. But I think that, gold, I think certainly is going to be pushed upwards by Chinese demand. I don't know enough about the market internationally to say where the price will settle. But as we look at what's happening in China, that will be a factor that will increase gold prices. Especially, you start looking at the Chinese currency. It is now at about 6.95 or so to $1 US. We have seen a decline of somewhere 6, 7, 8% in the renminbi against the greenback this year. I think that we are going to see well past 7-1 in 2017. And this has an effect on the Chinese people because, as we talked about before, as they rush out of their own currency, they've got to find something else. And if their money is trapped in China, as I think it will be to a certain extent, they are going to go for metals.
All right, Gordan, on that note, thank you so much. Thanks for joining us and Happy New Year.
Happy New Year and season's greetings to you. Thank you.
And thanks for watching our Outlook series. We'll have more for you, so be sure to stay tuned to Kitco.com. Thanks for watching.